Hello everyone, today we're going to be talking about real estate versus stock market. Which investment suits you the best? Keep tuning. Welcome to Simon TV channel. In this channel you find valuable information about entrepreneurship, investment, wellness, and happiness. Real estate versus stock market. What is real estate? What is the stock market? Real estate is an asset you purchase which you can generate income from by renting it or by making a little bit of improvement and selling it. And the stock market is where you invest your money on companies. Basically, you buy a share, you hold it, hoping that company will increase in value. When it does, you sell, you get your profit. Or on the stock market, if a company pays dividend income, which is at the end of the year, if they profited, they'll pay you as a dividend out of their profit. Most companies pay every quarter, every half a year, or once a year. With that, stock market can generate you a passive income if you are collecting dividend. But most of the time, the real estate passive income is more consistent. As long as the property is rented, that you will be generating income continuously month to month. So what's the advantage and disadvantage of the basic investment of real estate versus stock market? And why I wanted to share this with you is because I want you to be aware now with pricing being so low on the stock market, and I want you to kind of compare what you should do as coming forward so you will invest your money so it will be in long run you'll benefit from it. So let's get to it. So real estate versus stock market. First, I want to share with you investing in stock market. What is the benefit, what's the pros, and what's the cons? When you invest usually in the stock market, your money is liquid. If you decided you want to have some cash for emergency, your money can be available to you as easy in 24 hours or in a couple days. You should be able to get your cash out of whatever you invested in. You will sell and you get the money out. That's one big advantage. The second big advantage is it's easy to diversify, which means you can buy stocks on a healthcare, food industry, oil, utilities, constructions, and real estate, anything you name it, anything you wanted to invest in, there is a way you can buy any different companies, or you can buy any different index funds which is targeted in the different sectors. That would be your best diversification way of investing in the stock market. The third advantage is very low cost. Pretty much now most of the trading brokerage companies, they announced there won't be no fees on the trading stocks last year, which is now there is no fees unless you buy something else, mutual fund or to that nature. There might be small fees you have to pay attention to, but that's another big advantage. Every time you buy and sell, pretty much there is no fee now. Also, the next advantage when you invest on the stocks is based on which vehicles or which accounts you opened up. If you open a retirement account, on the gain of that money till you retire, if you don't touch it, there is a big tax advantage versus if it's just a regular account. If you receive dividend income or any other incomes on that account, whenever you buy and sell, you might be taxed. So if you utilize the retirement plans or accounts on buying stocks, there's a big tax advantage. What is the disadvantage of owning stocks? Stock market is more volatile than real estate, which means there's a lot of movements of up and down, And if your account is not a retirement account, the stock market you invested in, whenever you take a profit, there is a big fee. It can be up to 40% if it's less than a year. If it's longer than a year, it can range between 16 to 23 to 25% based on your situation. You need to refer that. In every person's situation is a little bit different how much the taxes will be, but there is a huge taxes. So just keep that in mind. There's always a big tax disadvantage when you trade stocks on regular account versus a retirement. If it's a retirement account, there won't be taxes till you withdraw the money out of that account. The third big disadvantage is sometimes some stocks might not grow and they will just be flat. So let's say you purchased it at $20. 10 years from now, it might have just moved only to 22, or it might have just went down to 19. So in a long run, sometimes individual companies, based on if their sector changed or they had a big debt or something happened, a lawsuit, and there's so many situations it can happen with one individual companies. If you invested in one individual companies, so your money might not grow as much. So keep that in mind when you purchase your stocks. Always remember that, especially if you buy it on the high side of a price, it might be something you might not make any money. Or let's take an example. If you would have owned any of the airline industry right now, their prices are really low, almost some of them like 70% down from if you would have purchased it at $50, $60. Now that stock, that individual company, because the airline industry was great investment in the past, but now they got hit big time. And if you would have owned one of the stocks, it would have been a tough thing because you really lost a big value on it. The last disadvantage on investing on a stock market is there is a big potential risk, high risk, being an emotional investor. So if your money is invested when you see the market is tanking, the human emotion usually will be automatically to exit as the prices come down. Always remember, emotional investor will not do good in stock market. So once you invest, you should have a long-term plan. Once you have that long-term plan, and you should not be bothered on the daily up and down. You just set it and forget it. Whatever reason you invested on, it had to be a long-term investment. Investing on real estate, what is the pros and the cons? Real estate actually is one of my favorite investments because for this four big reasons. The number one reason on real estate investing is because of the passive income. If you bought a property with the right pricing and also a good location and a good area where you can always rent it easily, whether it's a commercial or residential, once you can rent it, you're always going to be continuously receiving a passive income. Yes, there is a thing called vacancy rate. Almost in every property, there is a time where a tenant moves out and a new tenant moves in. On that time period, there's always a negative months where you might lose a couple months here and there, but overall, a passive income is a good investment. A good real estate will get you a passive income. The next advantage is, as always, a tax advantage. On the tax advantage, what I mean by that is whenever you have a rental property, there is stuff you can't claim on residential home, but you can deduct on rental properties. When you have income, then you can deduct like what you paid for mortgage interest, what you paid property tax, insurance, maintaining the house, and some utilities and other expenses you have to keep that house going so you can keep it rented. So that way the amount of taxes you'll be paying on the passive income would be a lot less, and you can deduct a lot more. So that way your benefit is really good. The next big advantage is hedging against inflation. So whenever you purchased a house, now everyone is talking about the government is printing a lot of money, inflation is going to be high. What it means by that is, to give you a simple example, if $10 was able to buy you whatever things it used to buy you in 1999, it's not going to be the same as right now. The $10 is not going to buy you the same thing, which means the price of everything will go up slowly, but the dollar price, the dollar value decreases with the inflation. So with that, on real estate, as the inflation goes higher, the price of the property also goes higher. So that's how it can keep up with the inflation. So real estate is always great in that sense. The ability of leveraging the property you buying on rental properties or any real estate is because you're going to be using the lender's money. So let's say you are putting down between 10 to 20 to 30% of, let's say even the high number we go, if you put down 30% of your money to purchase a rental property, instead of paying the full amount, now you're using the bank's money to borrow so you can purchase the property. So let's take a simple math here. So if you have $25,000 and you want to put that down to purchase that, if you usually put down 25% down for $100,000, you put down 25, the other 75,000 will be financed in 30 years. Then the rental income you collect from that property will pay that mortgage. After paying the mortgage, you might have some extra money coming in, and the same time, as the years goes longer, your property value goes up. The same time, the amount of payment you've been making will reduce the principal. So 20 years from the date you purchase the property, or 30 years from the date you purchase property, based on what kind of loan you have, now you have a property is paid off. Then you can, when you sell it, you have a lot more money coming to you. That's how you make your big payoff, but throughout the years you have a passive income coming in too. So that's the biggest advantage of real estate. So what is the cons on owning a real estate? One of the biggest thing is there is work involved whenever you own a property, because they're going to be dealing with the tenants, the taking care of the property and all that stuff, which it comes with that is more works than if you purchase a stock. You don't have to worry about it. Once you bought it, you just let it be there, and once every 6 months or a year you can evaluate and figure out what you need to move around. But there won't be no work involved when you own a stock market versus real estate. But real estate, always you have to feel it, you have to see it, you have to touch it, and you have to really get involved with that property, so that way your property stay safe and also valuable. Expensive and illiquidity. So whenever you purchase a real estate, you have to save some money, and you have to be able to buy with some down payment, or you might have to come up with some creative way. But either way, you have to have a good credit. So the bank had to give you a loan, or if you bought it on a land contract or you made a deal with the owner, there's always an investment cost whenever you buy a real estate, from the closing cost and appraisal and all that. There is more fees involved, and also it's a little bit expensive. And also, property is not liquid, which means if you want to get some money out right away, you will not be able to unless you sell that property, which will take you at least minimum 30 days or more, because the process of closing and all that stuff. Even if you wanted to take money out of the property by doing equity loan, it still takes you a little bit of time. So every time you need some cash available to you, you wanted to take some money out, real estate would take you a little bit longer time. So it's a longer play, which is sometimes it's a good strategy for you, because you know you can't get to that cash, so chances are you're not gonna spend the money easily. Because if you had a stock market, you can press the sell button and your money will be in your account, and the next day you can withdraw that cash to whatever you want to do. So on the stock market side, it's great on being liquid, so you get to it as quick as possible. But at the same time, on real estate side, as illiquidity, it can be an advantage or a disadvantage on that matter. And also talked about a little bit about the high transaction fees, like a closing cost, an appraisal, and anything you do with real estate. Usually the fees are a little bit higher. There is always a maintenance cost, repair cost, things like that will come up, or will always going to take some cash from you. But in the long run, the investment will be much better payoff than stock market. And also, as we discussed on stock market, how the stock price can be flat for a long time. The same time on real estate, the appreciation of that property situation can change. It can be out of your control. You didn't see it coming. So many things that can change, and your value of that property might stay the same, or might even lose value on it. As any investment, you always have to pay attention, always stay on the top of the game. Like, you can avoid a big losses. At least you can't avoid every loss, but you can avoid a big losses if you are engaged and pay attention to your investment close enough. As always, remember, rule number 1 is do not lose money, and rule number 2 is remember rule number 1. As always, Warren Buffett says. As always, thank you for watching. If you're new, subscribe and give us a thumbs up. It helps our channel grow. We'll catch you in the next video. Take care.